Welcome, folks, to today's Bobcast. I'm Bob Benny, Certified Financial Planner with Bob Benny Wealth Management.
I'm Jessie Thompson. I'm also a CFP here at Bob Benny Wealth Management.
And we're glad you're watching. Thank you. Today's Bobcast is going to be a brief one. It's just about our 2026 outlook on the markets. And go ahead and start, Jess.
Yeah, so last year was a great year in the stock market. All of the earnings are piling in from last year, from the fourth quarter. And the year-over-year earnings growth rates for the fourth quarter of 2025 was about 12%. That's great. The stock market analysts are expecting the S&P to continue reporting those double-digit earnings throughout 2026. And we just want to remind you guys, there might be some turbulence in 2026 because of some different things that are going on, but earnings are what drives the stock market's actual value. The prices don't always reflect the actual value of the companies on the stock market, but their actual true value is based on their profits and their earnings.
The more profit they make, the more money, the more their stock is worth. And that's what keeps driving the stock market up and helps our confidence.
And that also means if there's turbulence, like as we're recording this right now, there's been turbulence in the stock market. That means that the underlying values of those companies, the companies that might drop significantly from one day to another, have not gone down just because their price has gone down. If the earnings are still strong, they're still a valuable company, even if there's turbulence in their price.
The price goes down when there's more people selling than buying, and there's some fear-driven selling going on. And that's what is likely to happen this year because of uncertainty regarding the midterm elections.
Yeah, and so just historically, strangely, this is always strange to me, midterm election years have historically, throughout a presidential four-year term, have been the most volatile year in the stock market in that four-year term. You would think it's the year that we're actually trying to elect a president because there's a lot of uncertainty about that and which party is going to be in control and all of those things, but it's actually the midterm election year. Historically, on average, midterm election years have returned about between 4 and 5%, which is about half of what the normal S&P 500 stock market return is of between 9 and 10%. Now, there's just usually more market volatility during midterm election years, and that volatility spikes during the second and third quarter, right leading up to the midterm election, and then usually subsides after the election is over. And then the stock market actually historically in the year after midterm elections, starting in that November after the election is over, does better than its average return in the year following. So it kind of makes up for if there's any lag in return during the midterm election.
But you can't depend on that happening.
And you can't try to time it because it doesn't, just because that's what the average is, that doesn't mean that's what always happens.
Right.
There's a lot of unknowns, but the reason why we say that is so that if there is volatility, don't be surprised and don't be afraid and don't make bad decisions. Don't
panic and sell when it's down. What you should do is when it's down and it's a fear-driven sale, a fear-driven sell-off of the stock market, is if the intrinsic value is there, and it is, of the companies, it's a great opportunity to buy if you have money sitting on the side.
Or a great opportunity to convert to Roth.
Right.
Also, there's strategies that you can use to take advantage of it, but don't be surprised by it. We're
on it, and if you have any questions or worries, we want anybody that's our customer that's watching this, or anybody that's not our customer that's watching this, if they want some guidance or our take on these things, if there's a big sell-off in the market and that concerns you, feel free to give us a call, and we'll help you through it, because that's what we're here, is to help people.
Yep. So I think the bottom line of our 2026 outlook is that we are very bullish on the stock market and on the underlying values of the vast majority of the companies on like the S&P 500, but that doesn't mean that there's not going to be some turbulence this year. And when there is,
there's also opportunities. And so
Yes.
if you want to take advantage of those opportunities, we're here to help you. And we're here to help you with any of your financial needs, whether it's retirement income planning, estate planning, investments, tax strategies, all those kind of things. That's what we do here at Bob Benny Wealth Management, and we're here to help.
Thank you very much. Make sure you like and subscribe so you can see more of these videos and other people can get more free education too.
Have a blessed day.